What's up, everybody? Thanks for joining me on D's Analysis. We're going to be looking at MicroStrategy today. We're going to be going over the Bitcoin chart, MSTR divided by Bitcoin, and we're going to be looking at some indicators as well. So we've been respecting this long-term channel and upward sloping trend line. We got 3 bounces off of it, which is a strong sign showing that this thing is going to continue to be respected more than likely. It doesn't have to play out like that, of course, because we could get a close underneath it and then we have to retest and move it down further. But as of now, it's looking very bullish and positive. So let's see if we get another bounce and we move up to the upside. Now we have this trend line drawn out from the peak and we're touching the next couple highs. So in this scenario, in this case, we broke out of the trend line, got a breakout, retest yesterday. So let's see what the next move is. Let's see if we continue on higher, or if this really isn't even a breakout and we look at this trend line like this. Because if this is the case, then there is no breakout. So if we eliminate this one, then we never even broke out and we're still compressing. So if this is the case and this is the true trend line, then we just have to worry about the horizontal levels of support and this downward sloping trend line and this upward sloping trend line. So we definitely want to get a open and push above here and move to this trend line and break out of it. Because if we break out of this one, then we know for sure we broke out of the other one and this trend line, and now we can potentially move up higher. But this trend line does look pretty good because it lined up perfectly with yesterday's retest and we got a nice little wick off of it. So this trend line could be in play, but we'll obviously find out in hindsight later on. Overall, the trend looks very bullish. Long term looks very good. And the same thing that we spoke of prior, your flagpoles, for anybody who hasn't seen it, your flagpoles can measure out your targets. So we'll take it back to the first one here. You got a flagpole, perfect bull flag, played out textbook wise. You use your flagpole to measure the next target, and it almost got you spot on. And then we'll take the same flagpole here, and that gives us a measured target of about $1,000 to $1,200 roughly. And it also coincides with the top of the channel, which would be a perfect play out, which would be the 3rd touch of this channel, or maybe 4th touch actually. Overall, on a larger scale, the more you zoom out, the more bullish it looks. Because on a large scale, this looks like a minor pullback, and it looks like it's ready to go up higher. This one here was more of a, we got a sharp move down and then sideways. This one's been more sideways than slowly bleeding out compared to this one. This one was sharp move down and then sideways. This one's just been a slightly dropping downward movement. And then let's see if we get that next move up. On the daily SMAs, we are fighting against this 20-day right now. See if we get a close above it and eventually push to the 50 and reclaim it to get some momentum to the upside. On the weekly, we got this resistance right here, and it looks like that's the reason why we shot price down potentially on the 20-week. Now remember, these moving averages are lagging indicators because I have it set where it's the close of the candle. So this is the last 20 weeks of candles that were closed, and this is the last 50 weeks of candles. So it's a moving support and resistance line, essentially. That's what moving averages are. So that was acting as resistance, and price shot down because this is a strong level for a continuation of a bull trend or bear trend, depending on where you're at. We definitely want to get on top of it to allow price to continue up higher in an easier fashion. But we did get a strong bounce off the 50 here. We got 3 bounces, which is a strong level with this horizontal level of support and resistance. On the weekly Bollinger Bands, we already got our bounce off the green band. We made it up to the blue band, but now we got resistance. So you have the blue Bollinger Band and the 20-week SMA that are holding price down. So you have double the reason for it to shoot down, and that's what we ended up getting. It increases the likelihood that we get rejected there, and we did. So let's see if we retest it again and break through. The more you retest something, the more likely it is to break through. So imagine you're like chipping away at something. Every time you get a touch, you're chipping away at it, and then eventually it gets weak and you can break through. So the more retests that you get of any kind of support or resistance or trend line, it makes it weaker. So the next time you touch it, the likelihood of breaking it increases. Something just to keep in your back pocket. On the daily Bollinger Bands, we fell underneath the blue line, so we definitely want to get back on top of it and push back to the red. On the RSI, it looks like we could be trying to turn back around because we fell underneath the yellow moving average and price is kind of stalling out. It's not going down anymore as much. So you can see this is turning kind of horizontal here. So let's see if we get a flip and move back above this yellow trend line. On the weekly, we kind of have the same thing here, where potentially we found a bottom, hopefully, and we're trying to create higher lows and continue up to this yellow moving average, break above it, and continue the price in strength upward. The MACD on the daily is still looking good. We're getting that potential retest of the moving average. Let's see if we continue on up, and then we get these green candles to start reforming to the upside. In terms of Bitcoin, we've been running down this trend line for some time now, and we got this retest, which I told us that we should be wary about when we were over here, and it ends up looking like it played out perfectly, where we ended up getting a retest. I was saying we had two scenarios with this on the Bitcoin chart where we could push up, retest, and push down to this next horizontal level of support and resistance, which is exactly what happened. The other scenario I said is if we caught some momentum, broke out, retested, then we'd fight with this as support and resistance and break back into this channel. This second scenario can still play out, but we do need to break this downward sloping trend line. Overall, it's short-term bearish though, absolutely. On Bitcoin, the next levels I'm seeing would be a push up to 87 to 89. Once we break that, we see 92 to 91. And once we break that, we get to continue our way up to about 99 to 98 and eventually to the top of the channel. That's what I'm seeing on the steps back to the top, because that's usually how price moves. Price likes to move in steps. So steps up, steps down. Sometimes you take elevator up, elevator down. So it all depends on the sentiment and what's going on with that stock or crypto or ETF, whatever you're looking at on the charts. In terms of the pi cycle theory, I think we're not even close to topping yet, because these lines usually get closer. When you get close to the top, they start getting closer and closer, which we haven't even seen yet. As you can see here, it touched it, it didn't really cross, and the last time the top was called, we actually crossed here. So when these touch or cross, that's usually a sign of the top. That's why it's called the pi cycle top. So as you can see, we are very far. We're probably in this stage right here somewhere. As you can see, these things haven't even started running. They're still pointing in opposite directions. They haven't even started pointing both upward. So once this red starts pushing up and catching up to the green, that's when we can start saying, okay, maybe we're getting close to the top. But for now, in terms of the pi cycle indicator, we're not even close to the top. On the Fibonacci, we got a perfect bounce off the golden zone, the 0.5 to the 618. Strong continuation of the bullish trend. This is a bullish pull, so strong continuation to the upside. This is what it's showing. As long as we hold this, then the trend is very strong and still intact. Even if we lose this, it can still turn back around if sentiment flips. But this is definitely a good sign, as we got 2 wicks off of it, and now we're kind of just riding it as a support level, and we're not even really touching it too much. So let's see if we can get a sharp move to the upside. On the MSTR divided by Bitcoin, we're looking good. This shows Microstratgy measured in Bitcoin. So once this starts going up, this means that Microstratgy is outperforming Bitcoin, which makes sense. In a bull trend, Microstratgy should outperform Bitcoin because it's a leverage play on Bitcoin. It's a derivative of Bitcoin. When it goes up, it should severely outperform. When it goes down, it should severely underperform, as you can see here, drastically underperforming. And then once Bitcoin starts ramping up, severely outperforms. So on this chart, we definitely broke out, and we could be getting that retest now, slightly underperform for a little bit of time, and then we can ramp back up and get a nice move like this, or how we can see here. But we definitely got a breakout. Looks like we got like one retest, maybe this right here. We got one retest here, and this is trying to become a second. So let's see if we can get that and get a strong move to the upside. On the MSTR divided by Bitcoin, we did lose the 20-week, so we want to reclaim that. But we did get a strong bounce off the 50-week, off the MSTR divided by Bitcoin. And we got a strong bounce off the Bollinger Bands on March 3rd and late February. So let's see if this can continue to the upside and we start hugging this red band, how we can see here. Overall, though, I think we can still see higher prices. I think it's a short-term noise. They're trying to shake people out in the entire market, whether it's the S&P 500, Bitcoin, MicroStrategy. The whole sentiment of the entire market is negative. So this is usually when people make their most money, when you're buying things when they're on a discount. When you go shopping, if you see something on sale, you probably run in to buy it. But when things are on sale on the stock market, people run away. So you want to treat this like if it's a store and you're seeing a discount, 50% off, 40% off, you should be running to the stock market to buy as many shares of whatever company that you believe is going to continue to go up in the future. That's what you should be doing at this moment. Not financial advice, of course. This is a great opportunity, in my opinion. Until then, I'll see you in the next one.